Picture February 2025. You've just formed your catering LLC and head to the bank, documents in hand. The banker asks for your FinCEN BOI filing receipt, a requirement you didn't expect, forcing you into a time-consuming federal process before you can even open an account. Fast forward to June 2025. Maria, starting her mobile notary LLC, brings the same documents to the same bank. This time, no FinCEN filing is needed. In 20 minutes, her account is open and she's ready for business. What changed? On March 26, 2025, FinCEN rolled back its beneficial ownership information reporting for most U.S. businesses. This shift eliminated a major bureaucratic hurdle, saving entrepreneurs time, money, and stress. Now, domestic LLCs, corporations, and partnerships can launch faster, focusing on growth instead of paperwork. The contrast is stark. What was once a mandatory penalty-backed federal requirement is now gone for most U.S. companies. In this video, we'll break down what this change means for your LLC, why it happened, and how to navigate the new landscape for banking, credit, and compliance. The BOI rule began with the Corporate Transparency Act of 2021, aiming to fight money laundering and financial crime by exposing the real owners behind companies. Starting January 2024, most LLCs and corporations had to file detailed reports with FinCEN, listing every owner's personal information and updating it with any change. Non-compliance meant steep fines and even jail time, creating anxiety for small business owners. Critics argued the rule was redundant, banks already collected similar data, and it put sensitive information at risk. The backlash from entrepreneurs and privacy advocates was intense, leading to legal challenges and calls for reform. Ultimately, this pressure forced FinCEN to reverse course for domestic companies. On March 26, 2025, FinCEN officially ended BOI reporting for all domestic companies, LLCs, corporations, and partnerships retroactively. Over 32 million small businesses are now free from this federal filing, saving time and money. However, foreign-formed companies registered in the U.S. must still comply with BOI rules, including a 30-day filing window. Importantly, banks still require you to verify and document your company's ownership under existing customer due diligence rules. You'll need to provide photo IDs and clear ownership records when opening accounts or applying for credit. The difference? You no longer report this to FinCEN, just to your bank. Internal transparency and organized records remain essential for smooth banking and compliance. Let's see the impact through two examples. Maria's Texas LLC, as a domestic company, skips the federal BOI filing. She opens her bank account the same day, uses the saved money to build business credit, and secures a $15,000 credit card within weeks. In contrast, Greenwave Imports, a Hong Kong company registered in California, still faces BOI requirements. They must file owner information with FinCEN, hire legal help, and deal with ongoing updates. When Greenwave applies for a U.S. bank account, the process is slower and more expensive, with extra scrutiny and delays. Domestic companies now enjoy a faster, cheaper path to funding and credit. Foreign entities, however, remain under strict federal oversight, facing more hurdles. The rollback creates a clear divide. Domestic companies benefit, while foreign-registered businesses still face compliance challenges. Understanding your company's status is crucial for planning your next steps. What does this mean for your business? Here are answers to the top questions. The rollback doesn't affect your LLC's IRS tax status. Your tax filings remain unchanged. If your domestic LLC is owned by a trust, you're exempt from BOI reporting. But foreign companies with trust owners must still file. What about data already submitted? FinCEN will archive, not delete, prior BOI reports for now. Final rules on data deletion are pending. Some states like New York are introducing their own transparency laws. You may face new state-level reporting even if you're exempt federally. Stay alert to state legislation. Compliance could soon vary by location. The key federal relief is here, but state rules may be on the horizon. Monitor both federal and state requirements to stay compliant. With federal BOI filings gone, focus on strengthening your business foundation and credit. First, audit your documents. Keep ownership ledgers and ID copies up to date and consistent across all records. Next, pull your business credit reports. If you're new, open Net 30 vendor accounts and pay early to build a positive history. Apply for a business credit card that reports to bureaus and keep all payments on time. Schedule regular legal audits to keep your ownership records current, especially if your structure changes. By year's end, aim for 3 active, positive trade lines and flawless documentation. This proactive approach turns regulatory change into a strategic advantage for your business.